Hello, everybody. I'm Brian Duncan, local realtor here in Virginia Beach, and I cover the Little Neck area. And so this is going to be an update for the Little Neck real estate market. And I'm going to cover several stats. That way you know what's going on here locally. And it's usually very different from what's going on in Virginia Beach as a whole or Hampton Roads as a whole. So the four stats that I like to cover are going to be the sales prices, number of sales, the days on market, and then finally the inventory. All right, so let's dig right in. I'm going to go ahead and share my screen so that you can see what's going on. And we'll look at some of these stats. Okay. All right, so this first one here is going to be the sales prices. So the chart goes back 10 years, but you can see that sales prices have obviously trended up. There was a sharp increase during the first couple of years after COVID. In Little Neck here, there was a slight decrease in 2024 for median sales price, and then has continued up so far this year. Now, when I see this, you have to ask yourself, okay, is this a decrease in home values across the board, or did just lower priced homes sell? So one way we can look at that and try to get more info is if we look at the sales price per square foot. So I'm going to look at this chart here, and this is actually the list price per square foot, but it's still reliable because during this time frame, homes sold for 100% of their list price, and I'll go to that chart too and show you that. But you can see that over time, that the list price per square foot, it used to be under 200. And then in 2020 during COVID, we had a sharp increase and jumped to as high as 250, and that trend has continued up. So when I reference that sales prices dipped in 2024, because this has constantly gone up, that tells me that year they're just smaller homes sold because the average price per square foot has continued to go up. So that's not really a concern. If we go to another chart here, this is going to show us the number of sales, or the number of houses that have sold. So going back to 2015, 10 years ago, right around 150 homes per year. And that increased, obviously, when rates were lower during COVID, a lot more people were moving. And since rates have increased, less people have been moving. So it trended up above the average here. Now we're below. It's still lower. And if I look at the raw data here, we can see 2021, over 200 homes sold, then dipped down to 139 in 2022. 2023 was 102 homes. 24 was 103. And then so far this year in 2025, through mid-August, we have 66 homes sold. And it'll be interesting. I think we're on track to meet and possibly exceed the 103, but we shall see. All right, so the next thing I want to cover is going to be, let's go to days to sell, number of days to sell. So we'll jump to that chart. And, if I went back even further than 2015, we would see that it would be between 50 and 60 days, probably all the way through like 2011, 2012 timeframe. That was about the average, and it stuck around there. And then we started to see a shift in 2016 where it started to trend down. And, as this started to trend down, it was obvious that homes would be selling faster and for more money. And then we had a huge decrease during COVID. Obviously, homes were selling much, much faster. We dipped below 10 days on the market. Slight increase here, but still, even currently, we're well below 10 days median time on market. And you can see the raw data here, 7, 9, then 13, 11, and currently 5 days on the market this year. All right, so finally, the last thing I want to cover is going to be the inventory. All right, and so the inventory will tell us the direction of pricing. And what we do is we'll look at how many homes are selling on the market per month, get a monthly average, and then we'll look at how many homes are available now. And using that number, we can predict how many months it would take to sell through the current inventory that's on the market right now. So historically, 6 months or 5 to 6 months would be the average. If there's 6 months worth of inventory on the market, that means steady price increases, slow, steady appreciation, even buyer and seller negotiation. And that's what we saw through COVID. Then, it obviously dipped below that here in Little Neck and got below 2 months. And that was towards the middle of 2020, very busy summer. And then since then, it's stayed below 2 months. I mean, there were slight increases here, I think, in the wintertime on a couple of these years, but it stayed below 2 months this whole time. And here I can flip to the raw data too, and you can see this. This is by month, though. You can see very low inventory in 2020, as low as 1 month, 2 months, and many of those months there. And then as we've gotten into 2025, beginning of the winter in January, it was 2 months, and we've stayed at 1 month here in Little Neck this whole year, and actually the majority of the last several years. All right, so I'm going to stop sharing the screen. So all this tells us that, I think the market is still very healthy. Prices are still going up despite what we see on the national headlines saying that certain markets are going down. But here in Little Neck, obviously it's high demand. We have top schools, great location, a lot of things going for it. The prices are definitely going to continue to go up. I think we would see even more sales and more price increases if rates would be lower. I think that's obvious. And when we look at, reports of what the Federal Reserve is going to do, they're expected to lower the federal funds rate here in September. We shall see what they do, but the truth is inflation has trended down over the last couple of years, really close to their benchmark of 2%. And I think once they start reducing that federal funds rate, I think that's going to trickle over into the mortgage rates too. Right now, the 30-year mortgage rate is pretty high compared to the 10-year treasury, which is typically the benchmark for what happens in the 30-year mortgage market. So that spread is pretty high right now. So as we build more confidence in the overall economy, I think that 30-year mortgage rate is going to come down. Everybody's predicting that. It's just a matter of when. Will we see it this year? I think we probably will see a little bit of a decline this year, and then certainly next year into 2026, we will see more declines. And as that gets closer to where people's current interest rate is, and there's less of a shock going from one house to another house and a higher rate, we'll see more people moving, okay? And more houses will become available. And I think we're going to continue to see price increases here in Little Neck. So thanks for tuning in. If you have any other questions about this market, any other segments of the market, other neighborhoods or regions or cities, let me know. I can pull up this information and help you understand what's going on with the market in those areas too. And if you ever have any questions or need help, just reach out to me. Once again, I'm Brian Duncan, a local realtor here in Virginia Beach and Little Neck, and hope you have a great day. Thanks.